Hi everyone, welcome to Thursday where we take a look and do a share and review. Today we're going to take a look at Skellerup. Now, it's actually sort of been a little bit of an undersung hero over the years. It's something that I've owned on and off myself, so this is definitely for education purposes only, not intended to be financial advice. So I'm really keen to show you Skellerup. Now, just before we jump across and do that, just remember I am running a debt webinar on Thursday and it's only for 60 minutes. And I'd love to see you there, especially if you are really thinking at the moment, I need to get ahead, things are compounding and I'm finding my financial situation a little bit difficult. I'd love to see you there. The link for that is in the show notes. Now, let's jump across and take a look at Skellerup. Right, as you can see, I've got Skellerup holdings up here on the screen. Now, they're currently trading, you can see there, at $5.76. They have had a high back around January 2021, and they had a high there. It looks like it was about $6.40. So it's trading below that at the moment. And you can see we've had a lot of dead cat bounces, especially from this period from the high. We had a lot of down days, and it did sort of lead into around that COVID period. We had a bit of an upswing, and then again, from about November 2022 down, we had that dead cat bounce again. So a dead cat bounce is where it hits a bottom and it will bounce up. However, the highs are getting lower and the lows are getting lower. And then you can see that it reached a low at around May 2024. We saw some good recovery. Then it hit another low, although this time that low is higher. So it was higher than the one we saw in 24. This low in April last year, 25, is a lot higher. And then it started that trend upwards again. Now, when I buy a share, I hear a lot of people saying that you've got to buy low, sell high. Well, yes, technically that is the right thing to do. However, what a lot of people do is they will see a share like this, and as the share is falling, they think, oh, it can't get any lower. And so then they will start buying, but they're actually chasing it down. So this is where I like to use my moving averages. So we'll grab those and we will pop on the 30 to begin with. You can see here that the share is trading above that 30-week moving average. That's a good sign. Now, we also want to compare it to the 15-week moving average. And I always use exponential for those that are unsure. It just puts more emphasis on the performance of the latter end of the share than the earlier end. Right, you can see here that the moving averages crossed at around this point here, which was July last year. And then since then, it's had a fairly strong run. It came back to the moving averages, then it ran up again. However, it did have, through this period here, 5 weeks in a row where the market fell, which is earlier this year. And a lot of that actually started with the wars and the likes. And you will see that with a lot of shares, perhaps that you owned yourself, that they did come down. Not at any stage, though, has those moving averages crossed. So in other words, the 15-week moving average is still trading above that 30-week moving average. So that is still a very good sign. So for me, for this share, it never hit its stop, and it's still continuing to run. I haven't adjusted it of recent times, but you can see here we've had 2 positive weeks in a row, which is a good, encouraging sign. Let's just jump onto the 1 year and see how that's looking as well. Now, we did see the moving averages cross to the downside at around the end of March this year, and now they've crossed again to the positive earlier this month, or middle of this month. Now, because I was already holding this share, these moving averages became irrelevant. That's where I like to use my trailing stops to actually get in and see what's happening. So let's go back and take a look at the 5-year chart. I'll take these moving averages off, and this time we're going to put on the trailing stops. We go ATR trailing stops. So I like to use a 21 period. The multiplier I use is 4, and I will make those sell stops darker. And I'll take away the buy stops because I don't use those. There we go. Now, I can't specifically remember when I bought Skellerup. However, I will have waited until those moving averages crossed to the upside. I would have also waited until the share is actually trading above the main board for the New Zealand Stock Exchange, because it is on that main board. And there I would have put my stop losses in. And you can see here that depending on, I can't honestly tell you when I bought it, but if we look here, you can see that blue line, blue dot. And so that means that that stop would be at around $4.20, $4.21. As the share moved up, you can see these dots have moved up as well. So all of a sudden it's gone from 421 to 436. And it stayed there for about 3 weeks in a row. Then it moved up again on around the end of October last year to $4.48. As you can see, it's moved up again. And we've actually had 6 times that the trailing stop has moved up. So the trailing stop for me is currently sitting at around that $4.93. Now, when we had those 5 weeks in a row where the market came down, because I had my stop loss here at that $4.93, you can see that the share never actually touched it. So it meant that I was still kept in the market, which is what the trailing stops do. They're designed to protect you. And as a share moves up, you can see here by the steps, that's how your stop loss moves in conjunction with that as well. Now, if the share falls, stop loss stays the same. I will never, ever adjust my stop loss down. However, as the share moves, that's where I adjust my stop loss up. So Skellerup has been, over the years, a very good share. It was certainly one of the ones that I owned earlier when I first started doing share trading, and it's something that I've got back into now. The thing to remember as well with stop loss is, I'm just going to go back to that, it's not terminal. Just because you might get sold out of a share, it doesn't mean that you can't go back into it at a later date. You've just got to make sure that it ticks all of those criteria that you've got set at your rules. And if I just go back along the screen a little bit, you can see through this period here, which was around August 2024, depending on when you bought it, you'd have your stop here at about $3.65. The share moved up, so the stop moved up $3.82, then it moved up again, $3.85. And you can see it kept taking these steps till it got to a point of $4.27. Now, if you bought your share at around this low and the initial stop was at $3.66, suddenly you have got up to $4.27. So that's a fairly good sort of profit you'd be banking. And you can see with this candle here, which is on the 7th of April last year, you can see that it fell below that stop loss that I've got there showing on the screen. So that would mean if you're actually using stop losses with your trading account or with your broker, you would have been sold out of the market. And then it would have meant, okay, it didn't fall much further. However, you would have been taken out, hopefully at a little bit of a profit, before it did continue to fall for another couple of weeks. That is what a stop loss does. It is designed to protect you. So Skellerup, it has been a fairly good performer, like I said, over the years. Take that off. Let's just go to all. It goes back to 2002 was when Skellerup first appeared on the main board. This S down here stands for a share split. Now, the thing with Yahoo Finance is it always adjusts the charts pricing as if the share had already split before, the share price had split before the split actually happened. So it just keeps the charts looking quite tidy and continuous. But look at the strong run that Skellerup had from around April 2020 until December 2021. So that's a really strong run. And then, of course, here we are here. So because I'm on the all, it brings up these candles to monthly. So we're not that far off. We're at $5.76 and it reached a high of around $6.34 back in 2021. Skellerup has been a pretty consistent performer over the years. And I thought, well, let's take a look at Skellerup and we'll show you. So I really hope that's helped. If you've got any questions, please reach out. I'm here to help. And until next week, take care.